Welcome to the ESG Leaders Asset Owner series. My name is Daniel Brooksbank with Responsible Investor. Nest, the UK workplace scheme, has just announced that it will shift £5.5 billion to a UBS climate fund as part of a sweeping new strategy. I'm delighted to welcome Katharina Lindmeier, Responsible Investment Manager at Nest, to discuss this. Katharina joined Nest in 2019, having previously been at Railpen and Standard Life. Katharina, welcome. Great to see you.
Hi, thank you for having me.
You're very welcome. Nest first seeded the UBS Climate Aware Fund back in 2017. I was at the launch, I remember, and I remember that Nest worked with UBS to develop that fund. I assume you're happy with how that methodology worked out.
Yeah, I mean, I wasn't at the launch. I joined Nest after we invested, but we are really happy with how the methodology has turned out, and we've got a really great partnership with UBS working together to continuously improve the methodology as well as their thinking and our thinking develops and the science and data develops. And we're really excited now that we are moving our entire developed market equities allocation into the Climate Aware Fund.
So what specifically about the methodology was it achieved so far, in your opinion?
I think for me, there's two things that really stand out. The first one is actually in terms of asset allocation and our carbon footprint at Nest. So by investing in the fund and through the methodology, we have taken £1.2 billion from more carbon intensive companies and allocated them to companies that are better positioned in a world where we are meeting the goals of the Paris Agreement. So that's one point. I think the second one is that we've got a really strong engagement framework that is also included in the methodology. So those companies that are underweighted in the fund because they are more carbon intensive, there's a big engagement focus. So currently we've got about 50 companies that UBS is engaging with either directly or through different investor coalitions. And that's also linked to proxy voting. So we are setting very specific objectives for these companies, monitoring the progress with UBS. And if we don't see the progress that we want, that is also escalated through our voting actions.
How do you quantify the impact of what you're doing?
So as I mentioned, on the one hand, we can quantify in terms of where we allocate the money. So we look at the carbon emissions of the fund, so scope 1, 2, and 3, which is basically calculated on the carbon emissions of the companies we invest in, and then allocated basically to the amount of money we've invested in them. And we track that against the benchmark as well, and we report that annually in our TCFD statement. We also track, as I mentioned, the progress we've made through engagement. So UBS and us have developed this framework for setting milestones and then monitoring the progress. In companies where we don't see progress against milestones, we can then take this further through voting action, through engagement, turning up at AGMs and actually making statements, asking questions.
Katharina, this is it's a substantial amount of money to put with one manager. Are you not worried about putting all your eggs in one basket?
No, we're really comfortable with the way that UBS have worked with us over the last few years and the way that the fund has developed. And we also believe that as a scheme, we're very well diversified. We actually are still going into new asset classes as we speak. So last year, we made our first allocation to private debt. And at the moment, we are procuring managers for private equity infrastructure.
The new policy combines asset allocation, fund manager selection, amongst others. Can you go into a bit more detail about the fund manager selection component of all this? How do you do this, and what are you looking for?
Yeah, so the key driver for this is that we want to be aligned with the goals of the Paris Agreement, and specifically the 1.5 degree target across all of Nest assets. But at the moment, the methodologies for measuring that alignment are still being developed, and therefore we think it's really important and a good starting point to look at all of the building blocks of our portfolio and work with all the managers to make sure that each individual portfolio is aligned before we try and start to look at potentially netting off certain portfolios or certain asset classes against each other to meet that goal. So how we're doing it in practice is that we've already had conversations with all the managers on the policy. We are currently in the process of reviewing the conversations we've had, and then we will be setting every manager some expectations and key next steps. As we've outlined in the policy, they will be specific to the mandate, but the kind of things we will be looking at is obviously asking them how that portfolio can be aligned with 1.5 degrees and working on methodologies for that. Also becoming a signatory to the TCFD, so the Task Force on Climate-Related Financial Disclosures, if they aren't already, and also to ensure that they are using their stewardship and their voting and engagement to also advance the goals of the Paris Agreement. We will be looking to set those milestones this year, and then we'll review them on a regular basis, and we'll make sure that our managers are progressing in the right direction.
What has the response been from the managers?
It's been really positive, actually. I think while this is a new policy and we've not previously asked our managers to demonstrate alignment with 1.5 degrees, we've always had a big focus on responsible investment and ESG integration. So to some extent, this didn't really come as much of a surprise that we were strengthening our climate change policy at this time. And all of our managers are quite excited to work with us on this as well. A lot of them have already started to look at different methodologies, and actually they've got a lot of expertise in-house as well. So we're really looking forward to going on this journey with them.
Shareholder resolutions, that's a component of this as well. Can you give us a bit more detail about how that will work? And will you be filing resolutions yourself, do you think?
Yeah, we already support most shareholder resolutions, usually those that are just asking for more disclosure, and also those asking companies to set strategies that aligned with the Paris Agreement. We've not previously filed shareholder resolution ourselves because we've been in pooled funds, so that's not been an option. We think generally that shareholder resolutions are an escalation mechanism, so we would be looking to engage with the company first, and we would also then potentially vote against management if we don't see the progress we want. There's also some complexities around filing shareholder resolutions, things like you have to have a certain ownership threshold. So it's probably not going to be something that we'll do on a regular basis, but we're not ruling it out if it's a company that we've not been able to move along and get in the right trajectory on climate change, then this is something that we would consider.
This was a major announcement, and I was just wondering what sort of feedback you've had from your beneficiaries, your members.
I think the feedback has been really good so far. We also did some engagement beforehand with our members and some research on whether this is something that people are expecting. And I think first and foremost, this is part of our fiduciary duty. So it's in the financial interest of our members to make sure that we try and mitigate the adverse impacts of climate change, both the physical risks and the transition risks on their retirement pots. But at the same time, there's also going to be broader impacts on our members in their retirement, from broad economy impacts on GDP to just quality of life, human health. And it just doesn't make sense for us to be chasing short-term returns now to grow our members' retirement pots if that means they actually have a lower quality of life in retirement. But I think this is also something that our members expect from us, and the response that we've had so far from our members, so reactions on social media, have been really positive and saying this is something that they wanted Nest to do.
You've said you would consider divestment if engagement fails. How will you know when that moment has arrived?
Yeah, we will be setting some very specific engagement objectives for every company that we are having concerns about. And as I mentioned before regarding shareholder resolutions, first off, we would try to engage with the company and get some commitments. But if that doesn't succeed, then there's other routes for escalation. So the easiest one is probably the next step is voting at the next AGM, so either supporting a shareholder resolution or voting against management, which we have also included in our voting policy, that we will vote against management resolutions if the company's not considering climate change risks sufficiently. But ultimately, if you vote against the company time and time again, you support the shareholder resolutions and you're still not seeing any progress, then that is probably not going to be a company that we want to hold in the long term, because if it's refusing to transition, then it's not going to be a good asset for our members. So it's going to look different for different companies, I think, and it's going to have to be on a case-by-case basis, and we'll discuss it with our fund managers. But by having this quite formalized process, we think that will help us in making the decisions whether we divest, and that's not something that we're going to take very lightly.
One last question, I think, Katharina. Did you use a consultant in all this process? Did you take advice on this allocation?
No, so we developed this policy internally, and the allocation, also just to say, it's part of a broader policy. Obviously, this alignment. Equities is our biggest asset class, so it made sense to start with this. But actually, we're going to be looking to align all of our portfolios with this goal over time. We've got a lot of resource at Nest, and we wanted this to be something that is developed internally, and we did a bit of peer review as well and engaged with key external stakeholders on this. I think we've now published the policy, and it's obviously not a very detailed strategy on how we're going to get there, but more a commitment and some guiding principles and some initial actions we can take. But we've still got a lot of work to do to get to our goal, and that means we'll be running several different projects now to get there, and we might use some external consultants for specific areas where we feel we don't have enough in-house expertise.
Thank you so much for your time, Katharina. Really appreciate it.